Joe Mazzola, Charles Schwab, Head of Trading and Derivatives Strategist. Joe, it's always great to see you on the show. So maybe start there, Joe, big picture, because I know you survey those Schwab customers and you want to get a sense of how they're feeling. When it does come to client sentiment, Joe, what are you hearing?
Yeah, so there's two. There's the behavioral, which is what they're doing, and the attitudinal, which is what they're saying. So let's start with that. So basically on the attitudinal side, what we're hearing is a little bit less bearishness than what we saw in April. And yeah, that makes sense kind of given the bounce back that we've seen. But, there is a little bit of trepidation around, the next couple months in terms of tariff and trade policy. One thing was interesting, Josh, was fixed income volatility was something that they called out that, is kind of they're worried about how that would make its way into the equity markets, just volatility as a whole. But I thought it interesting to hear them specifically call out fixed income volatility, and they're just curious as to see kind of what that it will do for their investments, and they are trading around some of that tariff and trade policy as well too. I mean, we got a month to go before we kind of figure out where we're at in terms of any deals getting done. So I think they're just getting ready just to kind of be able to react should something come out.
And among those Schwab clients, Joe, are there generational differences to call out in terms of how they're feeling now and what they see ahead?
Yeah, there have been, and specifically now, which you tend to see is Gen X and older have been a little bit better, kind of holding on to positions. You've seen a little bit more activity, with some of the younger generations, the millennials and Gen Zs, where they're kind of trading in and out. So I think that's something that we've seen. There's also been, what's interesting is we've seen a lot of rotation out of some of the higher beta names, and I thought this was particularly interesting because last time I talked to you, when we saw the April stacks, we had that drop, but there was a good amount of buying on April 8th and April 9th, kind of where that bottom was forming. And a lot of that had to do with some of the tech names, NVIDIA being number one, and you saw that kind of making its way through the rest of the Mag 7. But what we tended to see in May was a little bit different. We after that rally had kind of gotten us back to close to all-time highs, we started to see a lot of moving out of some of the higher beta names, information technology, communication services. Those were the two biggest net outflows in terms of sectors. And shockingly enough, healthcare was the biggest inflow. And the one stock that kind of garnered the most dollar inflows was United Healthcare. So, Palantir was number one on the buy list. United Healthcare was number two on the buy list. I don't think I've ever seen that, United Healthcare being even top 10. And then Amazon was number 3.
Are they mostly buying individual tickers, Joe? What about ETFs?
So that's another interesting point, Josh. This is something that we've really started to see, I want to say probably since the end of December, where there's been this rotation away from some of the idiosyncratic buying, idiosyncratic risk of owning individual names, and more into ETFs. I think that is something that really started to kind of take shape at the end of the year, but is even becoming more and more prevalent as you're starting to see the volatility in the markets. Yes, we hit a 60 VIX back in April, and I think what happened is people are saying, oh, let's rotate maybe out of some of the individual stock picking and get a little bit more into broader diversification. And you've seen that through the ETFs. You also saw a good amount of fixed income buying in May as well too, which is interesting because this is where you have to look to what they're doing versus what they're saying, because they're saying they're concerned about bond volatility, but at the same time we saw a lot of flows into the fixed income market, specifically treasuries.
What about margin balances, Joe? I know we touched on that last time we chatted.
Yeah.
Any update there? Trends to watch?
Yeah, no, those are coming down, and a lot of that has to do with just the fact that you're seeing the market bounce, right? So, and once that starts to happen, you see a lot of those margin balances kind of free up. The other thing that's interesting, Josh, is on the option side, you're still seeing a lot of premium selling. And I think probably a lot of that has to do with the fact that premium buyers just haven't been rewarded, right? You go from a 60 down to a 16 handle in the VIX, and it's hard to own that premium. Now, I will say this, and this is where I think this is different than maybe kind of what we've seen in the past where we've had these big moves. I was looking back at kind of client activity in June of 2024, where you saw a lot of upside buying on stock, but you saw a lot of upside buying on calls. It's different right now. You're not seeing much in terms of hedging, and you're not seeing much in terms of that upside buying. You're kind of seeing clients just kind of wait it out a little bit. They're trading more around kind of the at the monies and just more kind of in and out as opposed to taking positions. And I think a lot of that just happens or, has to do with some of the indecision and some of the volatility that could be coming out in the next month. It's hard. Like I said, it's hard being long volatility because it hasn't worked for the hedgers, but it's also kind of hard being short volatility as you're kind of getting around some of these exogenous moves that could occur.
Finally, Joe, I heard you mention the names folks are buying. I'm just curious, what are some of the tickers that made the list in terms of what they're selling?
This was a shocker, Josh. NVIDIA #1.
Wow,
I don't think I've
really?
seen that in the 2.5 years that I've been looking at this, because that has been a retail darling. It really has. There was 1 month where it was #1 on the sell list, but it also happened to coincide with #1 on the buy list, so it kind of netted each other out. This was the first time that I have seen it be #1 on the sell list, and it just happened to kind of coincide with earnings. So